So what if I told you there's a legal mechanism that allows you to transfer millions of dollars from your corporation in Canada to your family completely tax-free? No dividend account, no income tax, zero. And most Canadian business owners have never heard of it. Their accountants have never mentioned it, but it's been sitting in Section 89 of the Income Tax Act for decades. It's called the Capital Dividend Account, or CDA. In this video, I'm going to break down exactly how it works, the formula that creates tax-free credits, and how sophisticated business owners are using it to build generational wealth. If you're an incorporated business owner in Canada, this might be the most important tax concept you'll ever learn this year. So let me start with what the CDA actually is. So the Capital Dividend Account is a notional account, meaning it's not a physical bank account you can see. It's a tracking mechanism defined in Section 89(1) of the Income Tax Act. It tracks certain tax-free surpluses accumulated by Canadian-controlled private corporations, or CCPCs. So here's why this matters for you. When your corporation accumulates credits in the Capital Dividend Account, those credits can be distributed to shareholders. That's you, that's your family, as a tax-free capital dividend under Section 83(2). Not tax-deferred where you pay taxes later, not taxed at a reduced rate, completely tax-free. And I'll share with you numbers to illustrate how crazy that is, and most business owners don't even know about that. This is the mechanism that wealthy Canadians have been using for generations to transfer wealth and keep their legacy alive. So, what creates CDA credits? Three main things to understand. One, the non-taxable portion of capital gains. When corporation sells an asset for capital gain, 50% of that gain is tax-free. That 50% goes into your capital dividend account. Two, capital dividend accounts received from other corporations. So if another corporation pays you a capital dividend, that flows into your capital dividend account. Three, life insurance death benefits. This is the big one, okay? When your corporation owns a life insurance policy and the insured passes away, the death benefit creates a massive capital dividend account credit. And this third one is where it gets really interesting because unlike capital gains, which are unpredictable, life insurance creates a guaranteed future CDA credit. You know exactly how much will flow into your capital dividend account. It's contractual. So let me show you the exact formula, and this comes directly from the Income Tax Act, okay? So CDA credit equals death benefit minus your adjusted cost basis, which is ACB. The ACB is calculated as your premiums paid minus your net cost of pure insurance, okay? So the net cost of pure insurance is a deemed mortality cost that accumulates over time. As the insurance gets older, the NCPI reduces the adjusted cost basis. For many policies, especially over time, the ACB can drop to near zero. So here's an example, okay, to really drive this home. So let's say you have a death benefit with your life insurance policy, which is corporate owned, of $2 million, okay? Your adjusted cost basis at death will be $150,000, which means that you're left with a CDA credit of $1,850,000. Okay, that $1.85 million can be paid to your family as a tax-free capital dividend. So that means that you're only going to pay taxes on that $150K, which if you compare that to extracting $2 million as regular dividends, you'd pay approximately $940,000 in taxes at a 47% rate. So the CDA saves your family nearly $500,000 in this example. Now, there's a critical compliance point you absolutely must understand. Under Section 15(1) of the Income Tax Act, the shareholder benefit rules. So if your corporation pays premiums, but you are the beneficiary, CRA treats those premiums as a taxable shareholder benefit. So you lose the tax advantage entirely. The correct structure, okay, is that the corporation must be the owner, corporation must be the beneficiary, and the corporation receive the death benefit. The death benefit creates a capital dividend account credit, and corporation distributes tax-free to the shareholders. This is non-negotiable, and any advisor or financial professional recommending strategies must know this, okay? There's also an important consideration if you're planning to sell your business and claim the lifetime capital gains exemption, or the LCGE. So the life insurance cash value can affect your LCGE eligibility because it's not an active business asset. The solution is usually a holding company structure, but this requires, again, professional guidance. So why does the CDA or capital dividend account matter so much? Because it fundamentally changes the math on building wealth inside a corporation in Canada. Without the CDA, extracting retained earnings from your corporation to your family costs roughly 45 to 50% in taxes. Half your wealth disappears, okay? With CDA and properly structured corporate-owned life insurance, you can potentially transfer millions of dollars completely tax-free. And this is how sophisticated Canadian business owners build generational wealth. Now, the CDA is just one piece of a much larger playbook that wealthy Canadians have been using for decades. There's strategies for creating tax-free retirement income while you're still alive, strategies for maximizing deduction through pension plans, and critical decisions about which approach is right for your situation. So that's why I've created a complete guide, over an hour of content that walks through the entire tax-free wealth playbook for Canadian business owners. Everything from the licensing gap that explains why your accountant hasn't told you about this, to the specific strategies to who actually qualifies. The link is in the description. It's called the Complete Tax Wealth Playbook for Canadian business owners. So if you found this CDA breakdown valuable, that video goes much deeper on all these pieces together. So you're gonna see this video pop up on the screen right now. If not, you can click on the link in the description to watch this full breakdown, and I'll see you there.